word's American institution can be overused, but not when it comes to McDonald's. The Golden Arches continue to be an integral part of American economy. During the COVID-19 pandemic, McDonald's shows that its investment in digital technology paid off, and that continues today as McDonald's successfully adapts to a world where carryout and delivery are the new normal. In the next few minutes, Chris Markoch and I will discuss what Chris sees as the 3 reasons McDonald's stands out for investors, why the stock has been on such a run for over the past 10 years, and what letter grade Chris would give McDonald's right now. Chris, glad to have you back. I'm excited to talk about McDonald's.
Glad to be here, Laycee. McDonald's is a favorite of mine as well.
It is, but that ice cream machine's always down, it seems like. I don't know.
Well, if you're going to talk about McDonald's, you have to start with the French fries, right? I mean, that's iconic.
Yes.
And I'm a big fan of their breakfast sandwiches. But, before we get started,
the McGriddle?
No, I am not. My daughter
that is really a hit or miss for some people.
My daughter is a big fan. I am not, but we have to give a cap tip to one of the greatest promotions of all time. It's the Shamrock Shake, which is coming out.
Okay.
It's,
is that coming up here soon?
Yes. I heard actually, I think it's coming out by the end of the month. So.
Oh, there we go. Something to look forward to.
Yep.
All right, Chris, what are the 3 reasons investors should be interested in McDonald's stock?
Okay, so I'm going to call it my 3 Fs. And one of them is not French fries, but it's going to be fast food. It's going to be franchisees. And the third is going to be familiarity. So let's just go through these fairly quickly. Perfect. The first is it's fast food. Fairly self-evident on this one. McDonald's doesn't play in the fast casual arena. It's fast food. And it's done that effectively, and it continues to do that effectively. What I noticed about McDonald's was during the pandemic, they didn't miss a beat. I have a McDonald's a couple miles from where I live, and I just noticed that every morning, even during the worst of the pandemic, the drive-through line was around the restaurant, and it still continues that way. I mean, breakfast around the time when kids are being picked up from school, dinner time, you just see continuous traffic around the drive-through area, and I think it's that pivot that they've made from being an eat-in restaurant to being a drive-through carryout. They've done it very effectively, and I think right now, the pricing is a factor. I mean, more people are going back to the office, either in a hybrid situation or full-time. It's a little bit more challenging to get dinner on the table. McDonald's is a great option for that, and it's an economical option. They do a wonderful job with their pricing creatively. They even have an adult Happy Meal. And so it works out very well for families. And another part of that, and this isn't a criticism or anything about tipping, but one of the benefits for a family to go to McDonald's is the tipping issue is out of the way. I don't know about you, Laycee, but I've noticed that there's a couple of restaurants that I know that I've ordered carryout from where I have to leave a tip before they let me pay on the app.
Yeah,
that can easily turn a meal that was very affordable into something that's a little bit less affordable. Plus, it's kind of weird for me because if I'm going to give a tip, I usually prefer to give cash right to the person at the restaurant, but that's just me.
Yeah.
The second one is the franchisees aspect. And that's, so this is going to get a little bit wonky for some people, but let's just say it. Most McDonald's are owned by franchisees. So these are individuals that lease the restaurants from McDonald's, who actually serve as kind of the landlord for it. And they lease it to these franchisees for obviously a large markup. It kind of makes McDonald's have sort of a subscription as a service model. It provides a consistent revenue for them. In fact, I read somewhere where it says approximately 80% of the revenue from its franchisees. I'm sorry, McDonald's keeps approximately 80% of the revenue from its franchisees, as opposed to only about 16% of the revenue from its company-owned locations. So that's significant to their, to their financial picture. And third is familiarity. I wrote about this in my article for MarketBeat. It's always better to look at what consumers do rather than what consumers say they're going to do. Consumers are obviously still eating at McDonald's. I gave you my example in the McDonald's that's near me. Consumers are going to trade down right now. They know what they're getting at McDonald's. There's a familiarity, and that works to the company's advantage. And in the earnings report that they just did, you saw the same thing. Same store sales were up. So they're just continuing to deliver quarter after quarter. Consumers continue to dine there, whether they say they're going to or not.
All right. And anybody that looks at a stock chart can see that McDonald's stock has gone up about 200% in the last 10 years. Why the run up in the stock?
And that 200% is even larger when you factor in their dividend. And one of the reasons, now this, again, here we're going to get a little wonky, but again, I want to give the viewers some insight into this. One of the reasons for that is because McDonald's has been heavily engaged in stock buybacks. Some of our viewers might have even recalled that they heard President Biden talk about that in the State of the Union, stock buybacks. And essentially what this is doing is it helps a company's earnings per share because the company buys back more of their shares. So there's fewer shares to spread the company's profit across. And earnings per share, therefore, increases the stock price because investors value a stock by how much profit they get for every share they own. Hence, when the stock buybacks increase, generally the stock price increases. The problem that McDonald's is running into right now, and it's yet to be determined how big of a problem it's going to be, is that according to what they've been reporting, they generate about $3 billion to $6 billion in cash profits every year, but they pay out about $4 billion of that for their dividend, which is great again for shareholders like me. But it also means that over the past 10 years, they've been borrowing to do these share buybacks, and that has amounted to somewhere in the vicinity of $35 billion over the last 10 years. And that's starting to look a little bit bad on their balance sheet. They're a little bit leveraged. That doesn't mean that they're in any sort of financial trouble. It just means that they may be cutting back on the level of share buybacks that they've been doing, which means that investors may not be able to count on the stock growing as much as it has over the last 10 years.
All right, Chris. So that being said, all the things that you just shared with us, what letter grade are you going to give McDonald's?
So I was probably going to think about giving it like an A because I enjoy the stock and I'm a dividend stock guy and I love the dividend, but I'll give it a B. And because I think that, and for me, that's a hold. Because I can understand the argument that McDonald's is an expensive stock right now. It's trading, I think I checked it before I went on. I think it's trading somewhere around 32 times earnings. And that's not only expensive compared to like the S&P 500, it's expensive compared to the McDonald's historical norm, which is around 24 times earnings. So I'll listen to that all day long. Please, if you're watching this and you want to comment, I agree with you. It's an expensive stock. Having said that, once again, if you're looking for places to hang out or to park some of the profits that you might make from other stocks, McDonald's is a great place to do it. And that's because of the dividend. I think right now the dividend comes out to somewhere around $6.08 annually per share. And I always, when I'm looking at dividend stocks, that's one of the numbers that I look at because that's really tells me how much of that kind of that passive income I'm going to be getting just from holding on to the stock. That's a better indication to me than dividend yield. So again, I think it's a solid stock. Maybe again, not something that growth investors want to look at the time, but certainly one that income investors want to hold on to.
All right, there you have it, everyone. McDonald's stock. Chris, I'm a little hungry right now. I don't know, McChicken sounds kind of good for lunch. Might have to head over there. Well, thanks for joining me again today. Thank you to everyone who stuck around until the end. Let's continue this conversation. Leave us a comment down below. Let us know what the stock analysis means to you, what stock you want to see next. We want to continue to provide you with the news that matters the most to you. If you didn't know, MarketBeat has a free stock investors group on Facebook. I'll include the link down below if you'd like to check it out. It's a group for users to discuss stocks and trading ideas. So I think some of you might find it beneficial. Chris is even active in that time. I think he has some fun with it, right, Chris?
I do.
All right, please double check you're subscribed to our channel. It's super easy to click that button and it helps us grow this page. So we really appreciate that. Don't forget that we are also running a sale. We're allowing our viewers to try MarketBeat All Access Pass for free, completely free for 30 days. You'll get instant access to the information you need to stay on top of your investments. I've included that link in the description below as well. We want to help you stay ahead of the game, right, Chris?
We do. So please tell us what stocks you want to hear about.
All right. Thanks again, Chris. We'll talk to you so soon.
Thank you, Laycee.